Hello guys. Today I'm gonna show you top 10 tax-free countries in the world. So let's get started. Number 10. Bahrain. There are no taxes in Bahrain on income, sales, capital gains, or estates, with the exception, in limited circumstances, to businesses, local and foreign, that operate in the oil and gas sector or derive profits from the extraction or refinement of fossil fuels, defined as hydrocarbons. In Bahrain, there is no personal income tax (PIT) regime in Bahrain. However, individuals employed by a natural person or a legal entity or an enterprise in the Kingdom of Bahrain are subject to contributions to the Social Insurance Organization (SIO) rules in Bahrain. See Social Security contributions in the Other Taxes section. Number 9. United Arab Emirates. The UAE does not levy a tax on income. There is, therefore, no need for an income tax return in the UAE as there is no applicable individual tax within the country. The same also applies to freelancers and self-employed individuals who are residents of the Emirates. Tourists and visitors can claim refund on VAT paid on purchases they made during their stay in the UAE. Recovery of payment will be done through a fully integrated electronic system which connects retailers registered in the Tax Refund for Tourists scheme with all ports of entry and exit from the UAE. Number 8. Panama. Panama's tax system is based on a territorial concept of income. Citizens and residents are taxed on income earned from Panamanian sources. Non-residents are taxed only on income from Panamanian sources, and the tax on any type of income paid to a non-resident must be withheld by the payer. Panama's legal and tax structures make it a pure tax haven. Panama imposes no income, corporate, capital gains, or estate taxes on offshore entities that only engage in business outside of the jurisdiction. Offshore companies can engage in business locally, a rare perk, but will pay local taxes as a result. Number 7. Bahamas. The Bahamas is definitely considered a tax haven first and foremost because there is no personal income tax. There is also no capital gains tax, inheritance or gift tax, nor are there any wealth taxes or taxes on shared dividends and interest. The Bahamas does not impose income tax, inheritance tax or wealth tax. Social Security tax is payable to the National Insurance Board at 3.9% by employees and 5.9% by employers, or 8.8% for self-employed individuals, up to maximum amounts. Number 6. Qatar. There is no tax on personal income. This means that employees take home their wages and salaries without any tax deducted. However, an individual who exercises any type of commercial activity with the intention of gaining income is required to pay tax according to the company's tax law. See company taxation below. Non-residents may have to pay a 5% withholding tax if they've made money from services originating in Qatar. This rate is the same for individuals, self-employed workers, and companies. Number 5. Bermuda. Bermuda does levy a number of taxes, such as a payroll tax on employers and land taxes. There is no corporate income tax in Bermuda, and a company is considered a tax resident of Bermuda if it is incorporated in the country. Bermuda has not entered into any double tax agreements. Bermuda imposes no taxes on profits, income, dividends, or capital gains, has no limit on the accumulation of profit, and has no requirement to distribute dividends. Number 4. Monaco. Since 1869, Monaco has not levied a personal income tax on its residents. An individual must intend to stay longer than 3 months a year to be considered a resident. Major revenue sources include postage stamp sales, liquor and tobacco taxes, and registration fees. The state does not collect income or direct personal or corporate taxes. As a result of these liberal tax laws, numerous international business maintain their headquarters in Monaco. Number 3. Cayman Islands. One of the more enticing features of the Cayman Islands for retirees is the financial incentive. Residents are not taxed on income, purchased or leased properties, inheritances or capital gains, and there is no VAT, or value-added tax. The economy of the Cayman Islands, a British overseas territory located in the Western Caribbean Sea, is mainly fueled by the tourism sector and by the financial services sector, together representing 50 to 60% of the country's gross domestic product, GDP. Number 2. Vanuatu. Vanuatu is described as a natural tax haven, because for reasons unrelated to international tax and financial concerns it has historically had no direct taxation. In 1970-20 this feature caught the attention of the financial world. Vanuatu then began to develop as a tax haven. Vanuatu's economy is primarily agricultural. 80% of the population is engaged in agricultural activities that range from subsistence farming to smallholder farming of coconuts and other cash crops. And number 1 is Kuwait. Being a large oil producer, the government of Kuwait subsidizes the cost of basic food items, petrol, electricity as well as the healthcare system. The country offers zero tax on income earned by individuals, hence expats are not paying any taxes on their employment income in Kuwait. The Kuwaiti dinar is the highest valued unit of currency in the world. According to the World Bank, Kuwait is the 5th richest country in the world by gross national income. We will keep bringing such amazing videos for you. Subscribe our channel Amezing 10 to see more such videos in all categories. Thank you for your support. Keep supporting. Keep loving.